remember something. Commandment number 21 of my 10 commandments, we're up to number 21 now, is thou shalt avoid manias. And there is a possibility, I'm not saying it's a surety, but it's certainly a possibility that the Airbnb thing is a bit of a mania. Okay, not completely, yeah, I think it's a great thing. I love the sharing economy. It's all good, but don't go overboard and don't make it your entire portfolio. Okay, diversify long-term rentals, the good, solid, proven thing, and maybe a couple of short-term rentals in your portfolio being maybe 20% short-term rentals. And just remember something. Airbnb has not been through a recession. Hear me again. Airbnb has yet to go through a recession. It has not happened yet. Airbnb is too new. It's like a cocky teenage kid that hasn't been out in the real world who thinks they know everything. So, just a word of caution, a word to the wise there. All right, next up, Adam.
Next up, you were talking about how Airbnb hasn't been through a recession. It may not go through one for a little bit longer. You posted an article in our Facebook group that the Venture Alliance members have access to about how there are some important data points showing strength in the housing market. So this is good news as we head into 2020, especially you have people like Janet Yellen saying, oh, 2020 might be rough, and she might end up being right. But housing is looking very good for 2020. There were new home sales, says here, had a 12-year high in September and October, despite a dip in October a little bit. So there's great news. New home sales in October were up almost a third seasonally. So, I mean, we're getting really good news. And the one that struck me the most that I shared with you before we started, Jason, was they said about 2/3 of October sales were units under construction or still to be built.
Right, which means there's pre-demand here.
Yeah.
There's pre-demand. Yeah.
And home starts or permits for new home construction hit a 12-year high as well. So homes are finally getting built.
Yeah, that's something. This economy it's booming. I mean, there are certainly some signs of concern. I'll be the first to say that, but let me tell you, it's just amazing how the strength of, I hate to say it, the Trump economy. Okay, love him or hate him, he's good for the economy. He's a businessman. So,
yeah, and it's possible. I mean, you have all these new home construction things going on. If they're not pre-sold, if the economy goes into a big recession or even just a mild recession in 2020, or into 2021, if these new homes get built and nobody can afford to buy them, that might be pretty good for us as investors if they're on the starter home side. It doesn't say how many were on the starter home side, but if these homes get built and they can't sell them for what they thought they were going to be able to, they're going to have to lower the price.
Well, there's always a strategy, of course, and that's the wonderful thing about income property. You can always adapt and you can make it work most of the time. There are very few times in an economic cycle where you can't make a strategy work. And since we're only talking audio here and we don't have the ability to show a visual, you can just visualize a chart of a market. And of course, it has its peaks, its valleys, its ups, its downs. And, it looks like a roller coaster, right? Those are the cyclical markets with the very pronounced highs and the very ugly lows. And then there's the linear markets, the ones we like, which are very subtle highs and lows, but they still have their bumps. The thing that always kills people who don't follow commandment number 5, that is, thou shalt not gamble. Okay, the thing that always kills those people is that they simply cannot wait out hard times. The hard times usually don't last longer than a year or two at worst. And if they're speculating, they have no life raft. There's just no good way to make it through a storm. But if they've been investing versus speculating, then Adam, they're going to be in a much better position because the cash flow component of an investment is very reliable. The appreciation component is very unreliable, and history has proven that over and over again. So be a cash flow or a yield oriented investor. To liken it to stocks, you would be a dividend investor. You would not be investing in non-dividend paying stocks. You would not be in precious metals. You would not be in anything speculative, cyclical market, real estate. That's just where people always, always, always get hurt.